But let's talk a little bit more about those earnings, and we'll begin this morning's tour of corporate America with Snap. That stock is up considerably in pre-market trade. We see the results here. Company beating on the top line handily, on the bottom line handily. Sazi, I think Snap over the last, let's say, 3 years, probably one of the most interesting stories from a stock perspective, a management perspective, and we continue to see Evan Spiegel and this team really grow up in real time before our eyes, now set for another record high on the stock.
Great point there. Also worth mentioning, Snap is the #1 trending ticker right now in Yahoo Finance. And to your point, Miles, yes, the stock is again going to open up another record high, seeing almost potential 17% open here. Really, this is another mind-blowing quarter from Snap. Average revenue per user, or as street wonks call it, ARPU, up 75.4% in the quarter. If I have to poo-poo anything in this quarter, Miles, it is they noted reduced volume of people publishing stories. As we get out there, more mobile, people are publishing fewer stories. Didn't impact this quarter, something to watch moving forward.
Yeah, and you guys, I'm also looking, of course, at when you look at the daily active user figure at 293 million, which is ahead of estimates, a little bit of a different number than a different measure than the sort of average revenue per user, but still just the scale of Snap at this point is impressive. And even as people get out and about, maybe publishing fewer stories, but a lot of people use Snap for, say, texting. And so that's something that's not going to go away even as they become more mobile. Something that Snap highlights, that Twitter also highlights, is that advertising dollars are robust right now, and robust in particular online. It's so fascinating to me that even at this stage of the cycle, that you still have a lot of ad dollars migrating online. It feels like all the ad dollars have migrated there already, but that's not the case. There's more still to come. And so that's something that benefited Snap and seems to be benefiting Twitter as well. The moves that company is making in terms of monetization seem to be encouraging to the street. So to transition on over to Twitter here, I mentioned that Snap had 293 million users. Twitter only 206 million daily users, so smaller than Snap at this point. It did add 7 million new users in the second quarter, but the company is coming out with numbers that beat estimates, as you see there, both on the bottom and on the top line, and a forecast that's above estimates. It says the revenue is going to be $1.2 to $1.3 billion in the current quarter. Analysts have been looking below the lower end of that forecast. So again, that's encouraging to folks as well. And the company making encouraging comments as well, not just the hard numbers, but saying the Olympics were helping advertising as well, and that they seem pretty confident that momentum is going to continue here, and also that sales this year are going to rise more quickly than expenses. So guys, it seems like that is encouraging for investors, not just in these two companies, but in other social media companies too.
Yeah, and certainly, we're lapping quite a weak quarter last year, but when you're growing that ad revenue, up 87% for Twitter in the most recent quarter, certainly an encouraging sign. Something else, that's part of the Twitter story at this point is really what's happening on the product innovation side. And they've gotten dinged for so long on the fact that the Twitter timeline is the Twitter timeline. That's it. And yeah, they can tweak the algorithm here and there, and that has its ups and downs, but ultimately there was nothing new happening at Twitter. And I know, Sazi, we talked about the end of fleets, but there are other products that are sticking around, right? And the company calling out in their quarterly letter, tip jar. So if you really like my tweets, feel free to send a couple bucks my way if I set that up.
Where did I miss that?
Super follows is another option on there, where you can, have certain folks who are paying you just to read your tweets because they're so great. I'm sure we all know the feeling there.
I could be making money off of Twitter right now.
You could be, if it's available to you. I don't think they've opened this up to all users, but look, with your robust following, you are a verified user. I'm sure there's someone there you can contact to maybe work that out. They also have Spaces, which many of our viewers will know, and they're trying out ticketed spaces, so a paid space. And Sazi, obviously, for so long, there's been this finance Twitter view that Twitter should just charge for some of their products and then they'd make a lot more money. I'm not sure if it's going to fully go that way, but they're at least starting to spin the gears of innovation a little bit more quickly than we've seen for some time over there.
I'll just add this too before jumping to Intel on Twitter. I'm in a hole poking mood today. The U.S. monthly users, monetized users for Twitter in the U.S., 36 million, down compared to the first quarter of 38 million, and CFO Ed Siegel on the call tried to explain this is typical seasonality. Again, something to watch moving forward as the U.S. economy starts to open. Perhaps maybe a little less engagement here on Twitter. But going to mention Intel, too, here as well, Miles and Julie. Shares are down about 3% here in the pre-market. Company out with earnings last night, voicing a little concern, I think, in their forward guidance. That is the one thing that they're voicing, and they're concerned about their guidance for the coming quarter. Chip supply shortage. Intel CEO Pat Gelsinger really suggesting this can continue for the next year or two. And then again, data center sales down 9% in the most recent quarter. This has been a business that has been under pressure for Intel. They have been losing market share to a small rival in AMD, something to watch moving forward. But again, Intel shares down 3% here in the pre-market.
You know, Saz, yesterday I was wondering, with this sort of transition period that Intel is trying to go through, if investors were going to be patient. It seems like they're not going to be patient for the moment, right? And I should mention also, Pat Gelsinger was asked about some of the speculation that Intel would buy Global Foundries, and he sort of sort of danced around it a little bit, said, you know, we might be willing to make acquisitions, but it's not necessary. But you have to wonder, as they are trying to transition back into making their own chips, how exactly they're going to get that capacity, whether indeed they are going to be buying it or building it. But it looks like investors, they want it to happen yesterday.
Well, I think the answer that the industry has said is that you're going to have to buy the capacity, right? I mean, I know he can dance around the issue if perhaps, for instance, Global Foundries is not particularly interested in getting acquired by Intel. But I think, Gelsinger's comments, and if you go around, do a tour of the chip industry, Saz, and you see a lot of acquisitions over the last handful of years, it seems clear that there is consolidation that not only has been done but needs to be done in the view of most folks operating in that space.
Yeah, no, we'll put that question next week. Pat Gelsinger is actually coming back on the show, so we'll definitely put that question to him too. And guys, real quickly, American Express, watching that is earnings out this morning. Really, the earnings clobbered estimates, sales clobbered estimates. Stock is up about 5% in the pre-market. Ahead of the show, I did happen to catch up with American Express CEO Stephen Squeri. Really struck an upbeat tone on the pace of consumer spending. We'll have more from that chat a little later on the show. But again, all in all, American Express shares up 5% after really a pretty good quarter.
And Sasima,
and guys,
yeah, go ahead, Joel.
Well, I was going to say, we were wondering before the show how the corporate card business was going. And I'm not sure what they said specifically on that, but apparently the platinum card business is going well. It's costing them. They're spending more on perks to make those platinum cards worth people's while. But I know they also recently said that they're raising the annual fee on that platinum card to $695 is what that card will set you back if you have it as an annual fee. $550 was what it was before. Now it's going to be $695. But apparently people are willing to pay that, you guys.
Mere pennies. Well, deep tease, Julie. We'll have more insight into the state of corporate spending at Amex very shortly.
Julie, speaking of the annual fee, some years back when it was all the rage, everyone, you got to get the premium card, did the whole thing, ended up going with the Chase, I guess the Sapphire Reserve, which is now $550 a year, which is I'm not thrilled about, but I also considered the Platinum, which I believe at the time was $550. So I guess I saved $145. I'm sure the points guy would tell me if that's the right card, if I'm getting a good deal here, but nosebleed prices. $700 a year for the right to use the card to spend money.
But what are you getting?
Well, the reason the Chase ends up being easy is you get a $300 travel credit that they just take out. So like in January when I buy my train tickets, sad, now I have to get train tickets to get NJ Transit on the way in. That just automatically will come out for $300. So it's $250 effectively. But still, other than that, nothing. For a little while, I had a Lyft tie-in, but now I live in the suburbs, so it doesn't matter.
Sounds like a lot of work, $550?
Yeah, I'm not sure.
Cash, man.
I'm not sure if you get some rewards. I got a lot of points. Yeah. I bought some flights earlier this year with the points, but is it worth it? I don't know. The companies are deeming it is, though, because, Julie, as you mentioned, they're paying to acquire these customers. Obviously,
they are.
Obviously, it matters for them. Quickly, Saz, let's talk about diapers. Kimberly-Clark,
my favorite topic.
Kimberly-Clark out with their latest quarter, and as you noted to us, Sazi, this is not the kind of business that's generally going to grow faster than the economy overall. It's not going to grow a whole lot faster than population growth. Obviously, they're on either side of the demographic distribution with diapers for old and young people, but a 4% move for Kimberly-Clark is a big one after some disappointing guidance.
I just want to clear that up. I am not wearing any adult diapers, so if you are inferring...
It's only a 2-hour show.
Okay, I just want to make sure. But the call out here, and you're seeing Kimberly-Clark shares down 4%, that is not a typical move for a slow grower dividend payer like a Kimberly-Clark in the consumer goods industry. Worth mentioning here is the company's guidance. So they're really drastically lowering their full-year adjusted earnings outlook to $6.65 to $6.90 a share from $7.30 to $7.55 a share. They're noting inflation of $1.2 billion to $1.3 billion this year. Previously, they were looking for about $900 million to $1 billion in inflation. And really, the guidance here is severely disappointing, considering Kimberly-Clark already took price increases. So to see the guidance, you're thinking, well, they're likely to raise prices even more in coming months just to try to offset some of this inflation.
Well, what's interesting as we talk to so many different executives at so many companies is how much pricing power different kinds of companies have. And it's sort of intuitive, right, that on a higher priced product, there's probably a little bit more pricing elasticity where they're able perhaps to raise the prices by a little bit more. Something like toilet paper, it's sort of almost more noticeable if the price goes up more because it's a lower priced product to begin with. So it sort of makes sense that, there's only so much they can raise prices here, but nonetheless, in what is an inflationary environment, investors certainly don't like the fact that they can't get the situation a little better under control.
Yeah, we all thought way too much about our toilet paper, mostly availability of the toilet paper a year ago.
Isn't it great to see everything back in the store?
I don't think anyone cared what the price was. Yeah. Although there was a point, like in the winter last year, when stuff was in stock in a New York City grocery store, it was like, $12.
Miles, when you need toilet paper, you're just going to buy toilet paper. It's just one of those things you need because look at the other option. Do you want to look at it?
No one does. No one does.